In the first quarter of 2016, we have seen excellent performance from our infrastructure assets, both in terms of traffic growth and also operating profit growth. Looking at toll roads, starting with the 407 ETR in Canada, here we see growth close to 9% in EBITDA and also slight growth in traffic. In Texas, we have the North Tarrant Express that posted record ever EBITDA in absolute terms and also a very important growth in transactions. Also, LBJ is having an accelerated ramp-up. In other parts of the world, we have Spain with Ausol also achieving double-digit traffic growth and also closing a refinancing of the debt with bonds, the first time ever that we've seen in Spain, bonds with traffic risk. The rating for the transaction is BBB, investment grade. If we look into other areas like airports, also we see good growth in traffic and EBITDA at Heathrow. We have growth of high single digit in EBITDA, leaning not only on the traffic and aeronautical revenue growth, but also in cost reduction efficiencies that we are achieving. AGS, Aberdeen, Glasgow and Southampton is also seeing good growth. EBITDA is growing at 4% with also an effort in cost reduction. Also, I would like to highlight that we closed the sale of the Chicago Skyway and the Irish toll roads. This has impacted our net profit overall for the group with a very interesting growth and shows the value and the appetite for our assets. If we move into the contracting business, starting with construction, construction had a very good quarter in terms of contracting and also with good margins in the recurring business. We have lower sales that was expected since we have lower sales in Spain and also we are finalizing the big works in the US. But as I said, the backlog is growing. Looking into services, we have a stable Spain. And in the UK, we see the headwinds that come apart from the currency, the depreciation of the pound sterling, and also headwinds from reductions in budgets from local government. That's something that we have been discussing with investors, and the company is focusing now on reducing costs and trying to improve margins. These cost reductions will take place along the coming months. If we look into the financial position, we end the quarter with net cash position similar to the one we achieved at year-end 2015, held by the disposal of the assets I mentioned. And of course, we see the usual contraction from working capital effects in the first quarter of the year that improve along the remainder of the year. In summary, we have a good quarter with a solid position, and we are able with that position to look at investments like the broad spectrum opportunity.